SpaceX stock on July 15th dipped as low as $132.15. Before closing at $135.27, the stock has now fallen 33% from its record closing price, just weeks after the company's historic IPO. Despite the decline, SpaceX remains one of Wall Street's most valuable companies, with a market capitalization of roughly $1.8 trillion. While SpaceX's IPO was the largest in United States history, less than 5% of its shares were made available for public trading. That limited supply created intense investor demand and helped push the company's valuation to $2.1 trillion after its first day on the Nasdaq Stock Exchange. However, that scarcity may not last. Over the coming months, so-called lockup restrictions on insiders, employees, and early investors will begin to expire, allowing billions of dollars worth of additional shares to enter the market. Even after the recent sell-off, SpaceX remains one of Wall Street's most expensive stocks. It currently trades at 49 times expected revenue. By comparison, Tesla trades at roughly 15 times expected revenue. Supporters argue that SpaceX deserves such a premium because of its profitable Starlink internet service, its government rocket launch business, and Elon Musk's ability to maintain strong investor confidence. Critics, however, point out that the company reported a net loss of nearly $5 billion last year, raising questions about whether its valuation is justified. History also offers mixed signals. An analysis of 50 major United States IPOs since 2010 found that companies whose shares fell below their IPO price within the first 2 months generally underperformed those that stayed above. 8 of those companies, 21 dropped below their IPO price and have delivered a median gain of 61% since listing. The remaining 29 companies produced a much stronger median gain of 112%. Meanwhile, the biggest challenge may still lie ahead. Over the next several months, restrictions on insider share sales will continue to expire. The shares becoming eligible for sale are currently worth around $123 billion, compared with only $86 billion worth of shares currently available for public trading. In addition, another 455.8 million shares could become eligible for sale if SpaceX stock remains above $175.50 for at least 5 out of 10 consecutive trading days before its next quarterly earnings report. By December 8th, these lockup expirations will increase SpaceX's publicly tradable shares to 40% of the company. The remaining 60%, including Elon Musk's stake, will remain locked up until mid-2027. The question now is whether growing demand for SpaceX can absorb the wave of new shares entering the market, or whether investors are about to face even more downside.